Bismillahirrahmanirrahim. In this lecture, as you know, we are going to study various, accounting concepts and then accounting principles or convention. So, without casting any delay, let's start the concepts one by one. The business entity concept, the first one. Then money measurement concept, dual aspect concept, cost concept, accounting period concept. We are going to study them one by one. Conservatism, realization concept or realization principle, the thing is same. Then matching concept or matching principle. Then material, from material to materiality concept. And then objectivity concept, something from objectivity means something in quantitative, in numerical form. Then some accounting practices are conventions which are generally, these are quite broader areas, and these are the conventions higher, broader than the concepts. Going concern, consistency, and accrual basis. These three are the conventions or general accounting practices as prescribed by GAAP. GAAP means GAAP means what, Mustafa? GAAP or IFRS means we studied them in the generally accepted accounting principles and international financial reporting standard. We have gone through them in previous lectures. Okay, then accounting. First one is business entry. Let me read from the slide so that things can be easier for you. Accounts can be kept only for entities which are different from persons who are associated with these entities. It means account will be kept for those items which are different from the owner. For example, my business, the business items are different. I am the owner, I am different. So basically, these two are different persons, different human beings, are different entities who are associated with these. So accounts can be kept only for entities which are different from persons who are associated with. So business, that for example, sole proprietor, partnership firm, company. This is one of the most important and fundamental accounting principle which double entry system of accounting has evolved. With which double entry system means that whether you are in sole proprietorship means you are the single owner. For example, small shop, you have a small grocery shop, so you are selling, daily usable products, shampoo, soap, sugar, so one owner is there. He is responsible for all the business activities. Then partnership, where at least two or more than two persons, they share their capital with each other, and at the end also share the profit and loss in appropriate ratio, which is predetermined or pre-described on, you can say, business document or business proposal. Partnership is that type of. And then company means there are seven or more than seven. There are basically difference between public and private limited, but in general, on private limited company, minimum seven members should be there, and a limitation of more than 1 million revenue for company. Then you have to get it registered in SEC. So basically, in any sort of business, whether sole proprietorship, single owner, or partnership or company, we always record, the things there. We record the entries which are different from the person, different from the owner. You know, for example, accounts need to be maintained separate from the owners and providers of the capital. Because in general, our account need to be maintained mean the books of account, writing from the general journal to ledger to trial balance, all those accounts are maintained separate from the owner. Owner is there, but owner does not say, like he says, purchase raw material for 1 million. So raw material, he will make a debit entry of the raw material and a credit entry of the cash. So these two entities are different from the owner. So business records them in this way. So therefore, the business is separate from the owner. Account need to be maintained separate from the owners or the provider of capital means the person who are, for example, in partnership business, the people who are sharing money, sharing capital. Capital means in form of money. If you understand the simple logic, then you know 30% of accounting. For example, like if you know this principle that I am different from my money, or money monetary digits are different from the owner, it means you are already 30% aware with this subject, with the basics of this subject. Just recall fundamental from the, you know, it's about the respective level one, Siva, Oracle, and Bank. We will read their examples in the coming slides. These are actually, Bank is a sort of company, Oracle is a sort of partnership business, and Siva is, you can say, the owner of a shop, sole proprietor. Then let's move to slide number 13. Here types of organizations are given with example. Sole proprietor, Siva and Corporation, for example. Siva is the name of a girl. Anyone can be there who is having a business and she is a single owner. Then partnership, where Jensen brothers, Khalid and corporations, Chaudhary and brothers, where more than two or more than two people are associated. Then it's the example of company Oracle India Private Limited company. It's a private company in which shares are not traded in stock exchange and members cannot exceed 50. This is basically the limitation for their private company. Then public company, for example, it's saying Unilever, Hindustan Unilever Limited, a public company in which shares are not traded but shares are held by more than 50%. Means there are limitation of 7 in Pakistan for private limited company, and there is limitation of more than 50 members should be there in case of public limited company. Then SECPB, So you just need to have the concept of sole proprietorship up till this subject, then partnership business and private company and public company, these four. Okay, but not in about the details. We have to, on the level of concepts at this stage. Then, for example, here the things will be more clarified. Business entity concept. You are running your own textile showroom as a dealer in cloth, as a sole, like small shop is there, and you are running that. So, then example number two, you are working for Oracle Corporation and Oracle has a bank account with Bank of America and you have bank account with Citibank, and the salary at the end of every month is transferred from the Bank of America to Citibank. How many accounting entities involved in this case? If your answer is 4, then you are right. You, one person, Oracle Corporation, then the Bank of America, which is used for transaction, to Citibank, 4. So this is a partnership, more than two, but less. And then third is the example of public company. Okay, then move to slide number 15. Money measurement concept. As its name suggests that only the digits which can be converted into USD, GBP, like it's Britain pound, Great Britain pound, INR, Indian rupee, or PKR, you can say, those concepts will be measured. Like it cannot be recorded in accounting that books of accounting. Whenever I use the word accounting, it means books of accounting. Yeah. For example, the owner of business says, I have great affection for my employees. Not like affection, debit, I have this honor, and what are you giving in cash? Or if you, it cannot be counted in form of money. That's records should, as you rightly said, records should be maintained only of that transaction which can be expressed in, for example, in sole proprietorship and 40 tables and chairs. This cannot be recorded unless a value of furniture is known in monetary value. Are you getting it? You are having a shop. You are having 10 rolls of steel there, but you do not know the value, then you cannot. In the general or in the ledger entry, you will have to regard those 10 or 20 steel rolls in monetary terms. For maybe they contain 50,000, 80,000, 1 lakh. So then how will you write the assets or furniture or the equipment debit with 1 lakh, let's suppose, and cash credit with 1 lakh. So these are actually, they are recorded in the books. They are measured in the books in this form. Okay, then let's move to slide number 16. Just have a view and like assets and liabilities. Say the capital of that girl Siva was, 1,53,000 and this, and the assets for building furniture. Assets are being recorded in the form of 1,50,000 or 30,000. So basically, the money measurement concept is saying that only those concepts are recorded which can be expressed in money or monetary form. Okay, then move to slide number. You have to read them after my lecture is over, and you have to ask me again if there are still some discrepancies. Whole aspect concept is quite synonymous with the previous one. They say that whenever a transaction whenever a transaction happens, it impacts two sides of the book of account. And whenever I use the word transaction, the thing that should come into your mind is anything which involves give and take of money. It means transaction, whether through bank or through hand. You give 10 rupees to someone and get a pencil. This is also a
सर
transaction.
सिंपल वर्डिंग में जैसे कि एवरी डेबिट इज इक्वल टू क्रेडिट होगा
Yes,
तो डेबिट एंड क्रेडिट इसमें दोनों होंगे वो इक्वल होंगे
exactly.
सर मैंने आपसे पूछना था पेंडेड इक्वेशन मुझे समझ नहीं
Just a minute. Okay. Okay, then move to cost concept. Let me literally explain them. Coming to that slide. You are well aware with cost concept.
Yes.
Only those things will be recorded at the original cost, at the time or at the date when things were actually purchased. It's not like if the prices are increased after 2 or 3 days. So you change the because you just have to go to.
For example, we buy a 4 lakh a land in 4 lakh and we want only 4 lakh, not or 6 to 7 or
Yes, please. And just about the prices of petrol or other, items which are increased, quite frequent in Pakistan. So you should not regard them again in the books of, because you just have to make few entries and things change in the books. And the other concept is accounting period. As I told you, entities are recorded in two formats. Fiscal year, basically from January to December, January 7 to December 7, or April 7 to March 8. But in Pakistan, we follow 30 first of July, yes, to 31st of June. This is so basically counting period means when the books of accounts are closed. Books of accounts mean when the entities you start right from the general up to going to the ledger, then to trial balance, then to profit and loss are equal income statement, and then the balance sheet, it gives you a overall picture of all the assets and all the liabilities and all the capital. And if there are more owners, it can be owner's equity. Individual owner's equity means the separate portion, the individual portion of all the members. Every member is his owner equity. Okay, let's move to slide number 20. Yes, conservatism. Conservatism is basically a mindset of accountants. It says that you also need, for example, you need to consider the losses also in case. For example, uh, I don't know whether things get spoiled in steel business or not, but in many products like which are fruits, vegetables, or perishable things, eatables, where the possibility of loss is happen. For example, you make 100 breads daily and you record about the sale of 90 breads. Say maybe 10 breads get spoiled because of the weather or these things. So possibility of this is actually you have to be conservatism in your approach rather than 100, because they know these are us, we have sold to the bakery, but regard about about 90 instead of about the revenue, and 10 rupees they are actually saved in case of companies. But this concept says you have to be on the safer side. Let's read the example and then think it over. Anticipate no profit but provide for all possible losses. We are sure about the sale of 90 breads, those would be sold before expiry date, because 2 to 3 days are sold, 5 days are mentioned there. But possibility of, we should be more concerned about entering the possibility of losses. Accountants are by nature conservative, as I told. Conservative means a person who is very old minded, or who is very reserved, who is very careful about the spending of money. So accountants are by nature conservative, and also to protect the interest of shareholders and creditors, it is required to provide for all losses. For example, in case of partnership, shareholders are there, are company who have uh, put money in form of shares. Share is also you purchase the shares from the company and you pay money, and you can interchange share with your money anytime. So shareholder means anyone who has something monetary in monetary terms in the company or in the business. So they provide, accountant basically provide them with possibility of losses also. These areas we can, for example, a pharmaceutical company going to lose the case filed for patent right, filed for a medicine. Means pharmaceutical company knows that we have filed a patent right in the board, or in the SEC, Securities and Exchange Commission. This is basically a legal organization which decides these cases. So company knows I am going to lose this case. So even without the loss has happened, company will possibly record it in case of, at least convey to all the members that we are going to lose. So this is conservatism. We should be on the safer side. Maybe they win the case, it can happen, but probably they record losses first. This is a mindset. Realization concept. Do I need to read it, or should I read it? The sale is considered to have taken place only when either the cash is received or some third party becomes legally liable to pay the amount. Then it, realization means some, we say, oh, you realized it's raining, means when we come to know. Only then, when the sale is happened, I receive the cash, I will record. Otherwise, if the third person he says, I am legally I legally assure you that this person will pay you money after 10 days. So then you regard it as account receivable with that amount. So realization means either you receive money in physical form or in transaction form, you know, electronic form, or a third person legally guarantees you that money will be returned. So you regard that because you realize the money will be received. For example, a sale in revenues are recognized when they are earned or realized. So it means a third person is giving guarantee, or if a person is giving money, so revenue is being realized. Realization is assumed to occur when seller receives cash or claim to cash, as I told you about receivable, in exchange for goods or services. So example, a sale invoice for rupees 1 million, credit note for 15,000 received, and the remaining 9 lakh 75,000 are account receivable will be regarding. I think I should stop this video here. You just have a bird's eye view of those concepts again.